This is Nightly Business Report with Tyler Matheson and Susie Gehring.
Investors dump stocks. The major averages post their steepest drop in months, making today the fourth triple-digit move in the Dow this week. Why are big moves back in the market, and can we expect more?
Running past estimates. That's what Nike did with a blowout earnings report, sending shares initially higher in late trading, potentially changing the tone for tomorrow.
Another recall, this time Chrysler, but the reason is a familiar one: ignition switches. We have all that and more tonight on Nightly Business Report for this Thursday, September 25th.
Good evening, everyone, and welcome. Well, if you'd gotten used to relatively modest stock market moves this year, this week has delivered quite a jolt. Call it a double dose of Red Bull if you want, or maybe not. The Bulls were not in charge today. The Bears were. And technology and financial services shares led the major market barometers down. It was their worst day collectively since late July, and the fourth day in a row of triple-digit moves for the Dow, three of them downward dogs. Worries about global growth, geopolitical tensions, and some soggy economic data set the tone. Orders for so-called durable goods tumbled more than 18% in August, biggest monthly decline ever. That's mostly on a demand pullback for new aircraft. Also, first-time jobless claims rose 12,000 last week, even though they're still sitting near seven-year lows. All 30 Dow stocks ended lower as the index dipped 264 points, closing back below 17,000. The tech-heavy Nasdaq down 88, nearly 2%, and the S&P 500 dropped 32. Bonds rallied as investors took cover in treasuries. Yields on the 10-year fell to a two-week low. Bob Bazzani now with a look at today's drop and why big moves are suddenly back on Wall Street.
It was the fourth day of triple-digit moves in the Dow. Slowing growth around the world was an issue for the markets earlier in the week, but today a couple of additional issues surfaced. First, Richard Fisher, the head of the Dallas Fed, said before the markets opened that the Fed may start raising rates in the spring of 2015. That's earlier than most expected. Now, Mr. Fisher is a hawk. He's made similar comments before. But traders are well aware that the markets have struggled when the Fed ended its stimulus program in prior years. Mr. Fisher took particular aim at high-yield markets, saying he was seeing extreme risk-taking. Not surprisingly, high-yield exchange-traded funds dropped, some of them over 0.5%. That's a big decline for bond funds on very heavy volume. Second, there were vague reports that the Russian government may enact a law to seize foreign assets on Russian territory, likely in response to Western sanctions. Why is this important? Because Europe is already in a period of no growth despite keeping rates low. Any further escalation of that conflict could throw Europe back into a recession. That's a problem. The German market weakened when that story first came out prior to the U.S. Open and ended down 1.6%. From there, it was risk off in the U.S. markets. Emerging market ETFs were down over 2%. Momentum stocks that are heavily traded, like biotech and solar stocks, were also down 2 or 3%. While volume at the New York Stock Exchange was not particularly strong, there was heavy volume in the futures markets, suggesting that there were a few large sellers today. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And small cap stocks have also been hit hard recently. The small cap index Russell 2000 has fallen by 7% since July when it hit its peak this year. So why are investors turning away from small cap stocks? And does the recent weakness mean there are hidden opportunities? Morgan Brennan takes a look.
Small cap stocks have underperformed the broader market, down 5% this month alone. But experts say the recent weakness in the Russell 2000, which includes those small companies, could present a buying opportunity.
The small caps have outperformed for quite a while now. So this is kind of the first time they've underperformed in many, many years. And so I think that's got a little bit of people feeling a little uneasy about that. But the earnings are there, and they're not excessive valuations in small cap, I don't believe. And so we're very comfortable buying them down in this level.
Hodges, who manages a small cap fund, likes Capstone paper, which makes cardboard boxes. Also, Athlon Energy, an oil and gas producer in Texas Permian Basin.
We look for companies with great management that have a high insider ownership. You know, we want the management team to be incentivized not by pay, but by stock performance and stock price. We look for companies that have maybe a little different way of doing things than the norm.
Analysts at Goldman Sachs say they look for small cap stocks with strong free cash flow and solid earnings momentum. Names like SunCoke Energy, which Goldman predicts could rise 14% in the coming months, and Darling Ingredients, a stock that could surge 34%. Barclays analysts say they're focusing on stocks' values rather than just growth. They like energy companies, names like Eclipse Resources, Jones Energy, and RSP Permian, all stocks that Barclays believes could rise by double-digit percentages. Still, there are many reasons to remain cautious. Small caps can be very volatile. Most of their earnings are derived from domestic operations, so they're much more sensitive to rising interest rates, which are expected as the Federal Reserve begins to tighten its monetary policy. For Nightly Business Report, I'm Morgan Brennan.
Russ Koesterich joins us now to talk more about what these big market gyrations mean for your money. He's the Global Chief Investment Strategist at BlackRock. Russ, welcome back. Good to have you with us. You know,
thanks for having me back.
I don't mean to put lipstick on a pig of a day, but it occurs to me that on a day like this, with a violent move, that individual investors have an advantage. The advantage is that they're not graded every day. They're not even graded every quarter. They don't have to do anything.
I think that's right. And honestly, in the near term, we might see additional weakness. The market is adjusting to an environment in which the Fed will be less accommodative. But I think, thankfully, the longer-term fundamentals are in place. And if you're not a professional manager, you're not marked quarter to quarter, and you're comfortable with the stocks you own, well, the best thing to do might be to simply sit tight and look for some bargains, which this market may present.
Mm-hmm. But, Russ, why are these big moves back? You know, one day up by triple digits, another day down by triple digits. Why are they back, and are there more to come?
I think the answer is yes. There are more to come. Which is unfortunate. I think the market can go higher, but it's going to come with some more bumps along the way. Really what's changed is we're getting closer to the point when the Federal Reserve will start to remove monetary accommodation. And that's a very big deal because for the last couple of years, we've had an unusually quiet market, very low volatility. And a large part of that is because monetary conditions, credit conditions have been very easy. As that starts to normalize, volatility will normalize. And again, it doesn't mean we're going back to 2008, but it does suggest a rockier, bumpier road than we've been used to the last couple of years.
So subterranean tremors are starting to show their effects at the surface here. Was there anything really today that caused the Dow to go down 260 points?
Honestly, I don't think there was. You know, I've seen all of the headlines and Apple and the Russians. I think the truth of the matter is it's been a very good run. It was a lower volume day because of the Jewish holiday. And the reality is, again, we're getting to a point where if monetary conditions are changing, this becomes a little bit more normal. You know, we used to get 200-point days in the Dow. It wasn't that unusual. What's been unusual is we've gone so long without them.
Mm-hmm. You know, and we've gotten just used to one new high after another new high and just these small moves going up. And that's why I think a lot of people are wondering if we're in a new phase. And so a lot of people today were talking about maybe the correction is coming. It's been a long time since we've had a correction. What would a correction look like?
Well, you know, it depends where you're sitting. In some places, we're already seeing that. So we were speaking about small caps a moment ago. Small caps are down 8%. They're close to correction territory. And I think that's going to be an important element of this, that the market won't all be doing the same thing at the same time. Parts of the market, like the momentum stocks, biotech, some of the small cap names that have really benefited from strong momentum and where valuations have become stretched, those are the parts I think you're going to see experience the most drawdown. So this is an opportunity for investors to differentiate and think about what represents relative value in this market. And I think there are some areas, U.S. large cap, stocks in Asia, there are parts of the market that, while not screaming bargains, still look reasonable compared to the broader equity market.
All right, Russ, thank you very much. Good, sensible conversation there. Russ Koesterich with BlackRock.
Thank you.
After the market closed, some upbeat news from Dow component Nike. The world's largest sportswear maker posted strong quarterly earnings thanks to this summer's World Cup soccer tournament in Brazil. Excluding special items, Nike earned $1.09 a share. That was 21 cents more than what Wall Street analysts were expecting. Revenues also beat estimates, about $8 billion for the quarter, thanks to a 15% jump in sales of footwear and apparel. Investors bought up Nike shares after the company said it has a strong backlog of orders. The stock jumped as much as 6% in after-hours trading. Dominic Chu joins us now with more on Nike's results. I know you've had a little bit of time now to look over the numbers. What sort of stood out most for you?
So I just jumped off the conference call. It's still ongoing right now. But here's the key takeaway. They have a lot of growth in places where they didn't have a lot of growth before. Now, we're talking about developed markets, Central and Western Europe, Eastern Europe, North America. All of those futures orders came in much better than analyst expectations. So that tells you that's an indication of future business for them. If those orders come in better than expected, that means they could expect better orders from places like North America, Central and Western Europe. Where we saw a little bit of a decline in terms of the estimates, in terms of the analyst estimates, we didn't see as much strength out of Japan, China, or the emerging markets. But what they did say was that their women's lines continue to perform that much better than men's. That's where the growth is coming from. It's one of the reasons why so many of these companies, even their competitors, are making real strides in reaching out to that part of the population, because that's where the big money is right now.
And we saw within the past couple of weeks, Under Armour doing the same thing, wanting to go very aggressively into the women's market, an area I know you care about, golf.
I do, yes.
What are they doing there?
You know, well, here's the interesting part about golf. It's a formidable component within the golf world. However, it's a very small portion of Nike's overall business. So they are seeing strength. They're on the verge of a new product refresh cycle at Nike Golf. But for right now, the real strength, the one key takeaway here, is the strength in women's and youth apparel. That's going to be big for them.
All right, Dom, thanks so much.
A very big auto recall you should know about tonight, and it doesn't involve General Motors. Chrysler is recalling 350,000 vehicles from the 2008 model year because of an ignition switch defect that could cause the key to get stuck or inadvertently move from one position to another. Affected vehicles include the Dodge Charger and Magnum, the Chrysler 300, and the Jeep Grand Cherokee and the Commander. Thankfully, the company said it knows of no injuries or deaths related to the issue and only one minor crash. With American auto sales roaring to near record levels this year, the plants that are building those cars and trucks and SUVs are expanding again. Today, both Ford and Chrysler said they will increase the number of vehicles coming out of plants in Michigan and Missouri. Phil LeBeau has more on America's automakers revving up production.
They can't build them fast enough at the Ford plant outside Kansas City. So the company is hiring another 1,200 workers and adding a second shift as it moves quickly to keep up with demand for Transit Connect vans.
Well, we've been squeezing out more production in several of our plants, especially our truck and SUV plants, where the demand is, and we feel comfortable we'll be able to support a higher growth, if there is such a thing, in the auto industry.
They're making a similar move at the Ram plant in Warren, Michigan. Ram trucks are so hot, the company is increasing production, even though it currently builds a new Ram truck every single minute the plant is open. This auto boom has plant managers scrambling to crank out new vehicles. In fact, almost a third of all auto plants in the U.S. are running 3 shifts a day, a pace that has some wondering if America's appetite for new cars and trucks has hit its limits.
I think that we should be very cautious about where sales are now because it doesn't indicate an overall growth of the economy. And a lot of the sales are built on very inexpensive loans and long loans.
The average auto loan is now 5.5 years long, but an increasing number of borrowers are taking out 7- and 8-year loans, all to keep monthly payments as low as possible. That's critical since prices for new vehicles are close to an all-time high.
We believe there's still upside, especially on SUVs and trucks, because people are demanding more content, more capability. But we're going to watch it very carefully. And of course, as we say, as interest rates rise, that'll become a bigger part of the equation. But for now, consumers are willing to pay for the great products they're getting.
If auto sales continue at this pace, the U.S. could set a new record for sales next year. And it also may force automakers to once again push their plants to expand and crank out even more vehicles. Phil LeBeau, Nightly Business Report, Chicago.
More on autos, a vote of confidence for General Motors today. Standard & Poor's raised the rating of the automaker's corporate debt to investment grade. It's another step in GM's recovery from its 2009 bankruptcy. But its ignition switch crisis is far from over. Today, the first 2 families of victims killed in GM cars that had faulty ignition switches have accepted cash offers through the GM Victims Compensation Fund. The families of the two teenage girls killed in that crash of a defective Chevy Cobalt in 2006 did not disclose the amount of the offer. And still ahead on the program, could the country's strong supply of oil easily turn into a mega glut, sending prices much lower? We have details of a new report.
Well, the drones are coming, but this time federal aviation authorities will be ready for them. Just today, the FAA announced that 6 TV and movie production companies have been granted permission to use the small remote-controlled aircraft to shoot outdoor scenes on closed sets in order to maintain safety for all flights, big and small. The FAA will require safety inspections before each drone flight, and no flights will be permitted at night for now.
Eric Holder, the U.S. Attorney General, is stepping down. The nation's top law enforcement official, one of President Obama's longest-serving appointees, and the nation's first black chief prosecutor, will remain in office until a successor is confirmed. He may be best known for the multi-billion-dollar settlements that he reached with some of the nation's biggest banks over fraud allegations in connection with the financial crisis, even though no major Wall Street firm or executive has ever been criminally charged.
Oil was mixed today. U.S. crude fell 27 cents a barrel in choppy trading on the NYMEX, while Brent was up just slightly. Meantime, a new report out today suggests that U.S. crude prices could tumble $30 below international prices unless the nation begins exporting some of the product it's producing. Jackie DeAngelis has more.
The U.S. oil boom is on. U.S. production increasing to 9.5 million barrels per day earlier this month, outpacing forecasts and up almost 30% from last year, according to the U.S. Energy Information Administration. And analysts think that these production numbers have room to run. Estimates suggest that the U.S. could be one of the world's top oil producers by 2015, boosting its production to the highest levels since 1972. But a new study out by Wood Mackenzie suggests that this strong supply could turn into a supply glut. That is, if the U.S. doesn't start to export some of its product. If it doesn't export, we could see the differential between Brent and West Texas Intermediate at about $30. Consider the fact that right now that spread is about $4.
I do think the report has some validity. But the U.S. is nowhere near energy independence. While we are at record levels for producing oil, we still import about 7 to 8 million barrels a day. And until we get a closer number, or our number is closer to the 17 million barrels a day that we use, I can't see us exporting at this point.
There's been a lot of talk in Washington recently about lifting the 4-decade-old ban on oil exports, implemented in the wake of the Arab oil embargo of 1973. Lobbyists say that the ban is antiquated and exporting could add another dimension to the U.S. energy market.
If the U.S. decides to export oil, you'll see the price rise because the demand for WTI, what we produce here, will be greater. And if you look at the price differential between WTI and Brent, Brent is higher at this point. So naturally, the market participants will go for the lower priced crude oil, which is WTI.
But for the moment, we wait and watch. U.S. crude prices down 13% in the last 3 months have put money into our pockets. Retail gas prices 10 cents lower than they were at this time last year. For Nightly Business Report, I'm Jackie DeAngelis.
When it comes to IPOs, it looks like the second time's the charm for Travelport, and that's where we begin tonight's market focus. Shares of the travel services company were higher in their debut on the NYSE today. 4 years ago, the company attempted a London IPO, but it withdrew because it lacked investor support. Now Blackstone has backed the company, pricing its shares above the expected range at $16 apiece. The CEO says the company will deliver for shareholders.
We have no debt due now to 2021. Obviously, because of all the deleveraging we've done, our interest payments have gone down by about half. We're a very cash-generative business, so we anticipate being able to delever further now we're public, and we're going to pay a dividend to our shareholders as a testament of our confidence in our business going forward.
Shares rose 2.5% to $16.40. Scholastic posted a wider loss than expected as the Harry Potter publisher had disappointing revenue growth and higher expenses. The company usually reports a loss for its first quarter since schools here in the U.S. are out of session, but its results were still well below estimates. The stock dropped 5.5% to $32 and change. GameStop is almost doubling its number of holiday workers as it prepares for strong demand for new video games and the new iPhone. Altogether, it'll add 25,000 employees for the seasonal rush. Shares were off 2.5%, though, to $42.06.
Lockheed Martin plans to buy back another $2 billion in stock, and it also hiked its quarterly dividend. The defense contractor's new dividend is up to $1.50 a share and is payable in December. Still, shares were off a little bit. They finished at $177.44. Shares of Swift Transportation up on this down day. The trucking company reaffirmed higher third-quarter earnings guidance with its president and COO citing improved driver turnover and record driver recruitment. The stock popped 9.5% to $20.98. And shares of Skechers bounced back today after the company released an upbeat report on the state of its business. This was in response to a research note out yesterday that questioned the shoemaker's sales and tripped up its shares. Today, shares were moving up 3% to $54.05.
A warning today from cyber experts about a new computer bug that's posing a serious risk to computers using Linux and Apple's Mac operating systems. It's called Bash, and it's an even bigger threat than the Heartbleed bug that infected thousands of websites this spring, because Bash can allow hackers to gain remote control over your computer or mobile device, installing spyware or running commands.
Warren Buffett may be the world's best-known investor, but that doesn't mean he always gets things right. Buffett's Berkshire Hathaway holding company has lost a bundle on the British supermarket giant Tesco over the past year, about $700 million in losses. The chain's stock lost about 43% of its value this year after suspending 4 top execs and calling in auditors after finding some accounting irregularities. And coming up, sometimes a shift in strategy can save a small business. We'll meet one owner who took a risk, made a change, and her decision may be a lesson for others. The final part of Sharon Epperson's Small Business Matters is next.
U.S. Bank has been ordered to pay a huge fine and restitution to settle allegations that it charged customers for theft protection and credit monitoring services that they never received. As part of the deal with the Consumer Financial Protection Bureau and the Comptroller of the Currency, the bank, a unit of U.S. Bancorp, will pay $9 million in fines, $48 million back to borrowers.
Sometimes a change in direction can save a small business or give a big boost to an already successful one. In the final segment of our 3-part series, Small Business Matters, Sharon Epperson reports that it not only takes passion, but sometimes a wise business pivot to reach wide-scale success.
Meet Alexa Von Tobel.
I'm a certified financial planner who's extremely passionate about financial advice.
Von Tobel is founder and CEO of LearnVest, a company that started out offering financial advice to women.
I launched LearnVest a few years ago out of Harvard Business School. We were in the heart of the recession, and I had this big dream of making financial planning a mass consumer product as accessible as a gym membership. And I dropped out, and I set out to build it.
She was her own inspiration.
I was client number 1. I really, truly was.
And her mission was, I'm going to help people like me really understand everything about their money, about their portfolio, about retirement, about how to save money.
Financial advice has been seen in many ways as a luxury product, unavailable to many Americans. LearnVest's goal, Von Tobel says, is to provide financial planning to the masses, dispensing financial advice at affordable prices. The company's business model of advice on the cheap was well received by the female clients it was targeting. But that's not all. LearnVest also attracted the eyes of investors.
When you start to take investor money, they've had 5 rounds, raised over $72 million. You have to think about growth and you have to think about scalability. And the fact is, you have to think a little bit bigger.
Von Tobel did just that. In 2012, she pivoted, changing her business by expanding LearnVest's target audience to include not only women, but a broader audience of consumers seeking low-cost financial advice.
That's a huge audience. They're offering a sort of wide suite of tools that allow people who may not be making that much money to actually see what's happening with their money, see where it's going, and to plan ahead. And that's a big part of it, is that most financial planning is done with the 1% of this country.
We're going after the 99%, the 98.6%, if you will, of America that doesn't get access to great advice.
Creating a new product that may become a new model for the way financial planning is done. For Nightly Business Report, I'm Sharon Epperson.
To read more about the challenges small businesses face and what some owners are doing to overcome them, head to our website, nbr.com.
And finally tonight, Halloween is more than a month away, but consumers are already gearing up for it, and they're spending more money this year. The National Retail Federation predicts Americans will spend more than $7 billion this Halloween. That's up 3% from a year ago. And that works out to an average of about $77 per person. What are they buying? Candy, costumes, decorations, and parties. Many of them for adults, up, the number of people going to Halloween parties, up 30%.
Is that right?
Are you going to go to a Halloween party?
Oh, we have a big Halloween party at our house.
Oh, that's good. Sounds
for
good.
adults.
Oh, yeah. Good. Invite me. That's Nightly Business Report for tonight. I'm Susie Garrow. Thanks for watching.
And I'm Tyler Matheson. You all come. Have a great evening, everybody. We'll see you back here tomorrow.
I'm Susie Garrow with the Nightly Business Report News Brief. Stocks tumbled today on worries about global growth, rising geopolitical tensions, and weak data on jobs and orders for durable goods. Financial services and technology shares led the way down as the major averages had their worst day since July and the 4th day in a row of triple-digit moves for the Dow. All 30 Dow stocks ended lower as the index dipped 264 points, closing back below 17,000. The tech-heavy Nasdaq lost 88 points, a drop of nearly 2%, and the S&P 500 down 32 points. Chrysler is recalling 350,000 older model vehicles to fix faulty ignition switches. And retail experts predict Americans will spend $7.5 billion on Halloween this year, about $77 a person. Be sure to tune in to Nightly Business Report right here on your public television station.